Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Good to be back, Jim.
John, Alexandria Minerals dropped to just 4 cents last week after releasing an updated resource for the Oronada zone on its Cadillac Break project in Quebec. Why the negative reaction?
The market senses a massive betrayal of the minority shareholders. I introduced Alexandria Minerals last year as a Discovery Watch company based on Eric Owen's new approach to the Oronada zones on that 100% owned Cadillac Break property, which is just south of Val-d'Or in the Abitibi belt. The company put out a resource estimate for these zones back in 2009. After the experience that Integra Gold had on its property to the north with the Triangle Zone, where they had realized that there was a series of flat-lying veins present within the Triangle deposit, which had never been properly quantified because of the historic angle of the drilling done to delineate the resource, they were able to demonstrate that the grade was considerably better, and that ultimately led to a $400 million buyout by Eldorado just under a year ago. Eric Owens felt that the Oronada zones had similar flat-lying high-grade veins, and he started a drill program designed to assess the possibility that the resource wasn't going to grow substantially in tonnage, but possibly the grade would increase. Last week, the company put out an updated resource estimate, and it was based on 131 new holes, 36,000 meters that had cost $9 million to execute last year. But unfortunately, the resource actually came out smaller, about 321,000 ounces at an average grade of 1.71 grams per ton. That's 18% lower than the 3,000 ounces from 2009 at a similar grade. So all this effort seems to have been not too much of a success. However, the resource is considerably more robust because there's a lot more information that went into doing this. But what's really puzzling is that this resource was updated with still leaving about a number of holes, 10,500 meters of 37 holes into Zone 2. There were two of them, Zone 4 and Zone 2, and what was called the West Extension. Now, this is a puzzling situation because last year the board got upset with Eric Owens, the founder of the company and the CEO at the time, because the board had a different idea of where to take that company. And that idea, I have found out, and we talked about it in a recent Discovery Watch episode, was that Probe Mines, which owns a substantial land position to the north, would like to acquire the company. But Eric Owens, who'd been with the company for more than a decade, didn't really like that idea and wanted to continue on a standalone basis and wanted to do a $20 million financing. It was going to be dilutionary down at a nickel, but the market was bad, and that's where the price was. But the other interests associated with the company, they wanted to see Alexandria Minerals absorbed by Probe Mines. And this turned into an open conflict earlier this year when they fired Eric Owens for cause. Now, this news release, the day after, they put out another news release basically saying this resource estimate justifies our firing of Eric Owens because his theory was not at all supported. He basically wasted the company's money pursuing an idea, which interestingly is an idea that David Palmer of Probe Mines has been pursuing on his property to the northeast. And the controversy here is that the current board has no skin in the game. They are in essence proxies for Bay Street interests which really want to divert the upside opportunity from the minority shareholders into another basket where they have a lot more eggs and better control of the market. So in my view, this publishing of this resource estimate now, the argument that, well, we can do some more work. There's about another 1.5 to 2 million tons available in that grade range of 1.5 to 2 grams per ton, which, if you take the upper limit of that, there's maybe another 128,000 ounces to be found, maybe bringing this thing up close to 500,000, develop it as some open pit mines, and then maybe explore the rest of this fairly long property that straddles the Cadillac Break. And that's almost like a thumbs down. We don't really care. They also say we have to hire a whole new team because, of course, they have fired Eric Owens and all the other people who worked on this project. But where are they going to get that team from? And given the way they spun the company, this is really a setup for Alexandria Minerals to undergo a mercy killing. I don't know which party it's going to be. Probe Mines is an existing spec value hunter recommendation. If they end up acquiring Alexandria Minerals somewhere in a 5 to 10 cent valuation range, which would be at a premium to the current market price, and Probe Mines is able to hold its $1.20 to $1.30 range, that will be very good for Probe Mines shareholders. It won't be very good for the Alexandria Minerals shareholders, except perhaps in the long run when Probe Mines puts its exploration team to work on that project and hopefully comes out with something. But for now, we do not know the destiny of the company. It's being dictated by a no-skin-in-the-game management, which answers to an invisible shareholder group. And it's a sad story. Alexandria Minerals at this point has to be closed out as a Discovery Watch Junior.
We'll have more with John Kaiser right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're talking with John Kaiser. John, Ivanhoe Mines announced a blockbuster $723 million financing at a premium to a market that gives a Chinese company 19.9% of Ivanhoe. But yesterday, the Prime Minister of Congo signed into law the new mining code that President Kabila had promulgated in early March without making any of the changes requested by Congo mining companies. What does that say about the future of Congo?
Well, to provide some background, in 2002, a very favorable mining code was created for the Congo to encourage investment by Western mining companies. At the time, China was still just emerging as a new economic superpower. So the companies that went into the Congo were the usual Western mining companies. It worked for a while. The money went into the ground after a civil war that had completely disrupted Congo's supply of copper and cobalt, and everything was going quite well. But then the super cycle came along, and we saw the substantially higher metal prices, and of course Gécamines. It has a special relationship with Dan Gertler, an Israeli investor who has been a source of many of the projects that the Western mining companies got involved with, including Katanga mining. So there was all these allegations of corruption, and Joseph Kabila, who ended up in charge after his father was assassinated. He was supposed to leave a year and a half ago as president due to term limits, but he's decided to stay on and not call an election. But somehow a new mining code was introduced. It has some unpleasant facts like windfall windfall taxes, which are never a good thing for the mining industry. But it also increased the tax code or the net smelter returns from 2% to 3.5% for copper and cobalt. But then they also included a provision which said that any metal that's declared a strategic metal, the NSR cranks up to 10%, and lo and behold, shortly after Kabila promulgated the law, they cranked it up to 10%. So any cobalt coming out of Congo, and Congo supplies 65% of the world's cobalt and has enough cobalt to take care of the world's lithium-ion battery cobalt needs. This came as a big shock, but more importantly, the new tax regime basically said that all these agreements that were in place before, on the which Western companies had invested lots of money, they are void. Everything is subject to the new tax regime. And this is a form of resource nationalism. The mining companies are justified in being upset. And the decision yesterday or last night, I guess it was Monday in the Congo, to sign it into law, this kicks off a new phase in litigation, because now the mining companies can go to the world courts and argue that Congo has basically broken a legal agreement. Before, they couldn't quite do it. They had put forth alternative proposals based somewhat on the situation that Zambia has with sliding NSR royalties, where the government does get to participate if metal prices do go up, but not in this sort of a windfall profits tax where all of a sudden the lion's share goes to the government rather than the company that took the risk of developing these assets. But none of these proposals were adopted between the promulgation of the law and signing of the law. So we now enter a new phase of litigation. But this is an interesting situation because, as we know, Donald Trump is withdrawing the United States from a rules-based global order. It's back to America for him, and to hell with all the rules and that on which everything has been based. So in my view, this decision by CITEC Metals, which is a 100% state-owned entity of China, to put $723 million into Ivanhoe at $368 a share, which is a premium to the market. This is a substantial signal. It drops Robert Friedland down to 17%. Zijin Mining, which owns 9.9%, has the right to cough up another $78 million to maintain its 9.9% interest. So that would give two Chinese companies almost 30% of the company. Zijin, by the way, has 39.5% of the Kamoa-Kakula deposit, which is the best copper discovery in the world in decades. Friedland's Ivanhoe owns the other 39.5%. This financing will help Ivanhoe develop its share of the project. Gécamines, of course, has the remaining interest in this project and is never going to put up any money. So the Chinese company and Ivanhoe will together have to fund the capex of a world-class copper mine. This deposit, by the way, does not have any cobalt, so it doesn't solve the world's cobalt problem. But the way I interpret this is that China's willingness through a state-owned entity to put up this much money, acquire 19.9% of Ivanhoe, they don't really care about profits. Unlike, say, Katanga or even Ivanhoe Mines, which has to answer to its shareholders and show, here's what we're doing to make a profit for you. The only shareholder that CITEC Metals has to answer to is China itself, and its primary goals are of a strategic interest. So what I think we're seeing here is a signal that the Western companies are up a creek without a paddle with regard to their litigation against the Congo government about reneging on all these old agreements. China stepping in and saying, we're interested in security of supply for copper and cobalt. We're willing to put money into this country. We don't need to worry about profits or anything like that. We just need to worry about getting our cobalt and copper to give our keep our expansion going without having to rely on other parts of the world where we could end up in a geopolitical fracas. And given the situation now in Singapore, where Trump is supposed to be negotiating with Kim Jong-un about the future of North Korea, this is really a negotiation about the future of the relationship between China and America. Because if indeed the North Korea is declared, if the war is ended and is declared an independent country, then the United States needs to vacate South Korea. That's a further pivot away from Asia. It creates a vacuum that China will rush in to fill. And it really means a carving up of the world into different jurisdictions. And this Chinese move into Congo via Ivanhoe is a signal that Africa is really going to end up the dominion of China.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with John Kaiser. John, Zinc Mining issued an update last week for its West Desert project in Utah, and the market just yawned. How is the West Desert drilling program going?
The West Desert drilling program has been going slowly. They started in late March. What they reported was the results for the first hole. It was drilled to about 3,000 feet depth. But they only reported about half of the width, and they reported it in short intervals using a 5% zinc cutoff for the zinc-rich intervals and a 2% cutoff for the copper-rich intervals. And the market was left scratching its head. It was wondering, what was in between? These are relatively short intervals. This is a 50 million ton resource. What is this all about? And it wasn't really, you couldn't tell from the news release why management was excited about this hole. But I've done some digging, and I found out that the reason the western part of the main zone was declared as open was that back in the late 50s or early 60s, when Utah Mines had the project under option, they drilled a hole in this area, and it came up empty. And it was assumed to have been a straight hole, and therefore, obviously, the skarn mineralization did not project in this western direction. But subsequent operators, when they drilled this project, every single hole deviated, and they would have to survey it and figure out what exactly within the three-dimensional rock block they did intersect. And there was always this suspicion that that hole, which had been declared as perfectly straight, had in fact deviated and hit something that was off trend. So this hole was the first one drilled in this program to test this hypothesis, and it is indeed a significant result, because this one hole opens the ability to expand the hole to the west, or to the resource to the west, at a depth down to about 500 meters. There's a deeper resource or the carbonate replacement style mineralization below that depth. And I asked management, well, but why are the intervals so short? And they said, well, we were just using this as a cutoff. The mineralization in between, the intervals in between, are indeed mineralized, but they are below the cutoff grade that we decided to choose. And I thought, well, 5% zinc, that's pretty high, because, your resources is about 2.5% zinc. Did you mean zinc equivalent? And they weren't very sure, so I'm not confident that the news release has been correctly written, and the market was also left scratching its head. And then the company went on to talk about the next hole that's being drilled 650 meters to the east, and this is a deep hole designed to target an old intersection, C43, drilled decades ago, which nipped a 3-meter interval of both high-grade copper and high-grade zinc, which is different from what we're getting in the main zone, where when the copper spikes, the zinc is usually lower. So this is a potentially whole new zone of mineralization to the east that was never followed up. When they put out the news release, they said the hole was at 2,400 feet. Progress had slowed down a lot because they were going, or believed they were going through the Juab fault, which separates the hanging wall rocks from the prospective footwall carbonate rocks that are expected to host this polymetallic zinc, copper, silver mineralization. We should be very close to them letting us know that they have hit target depth. I don't know if we'll get any news releases telling us what they're seeing down there. In this case, if they reported substantial visual intervals, it would be meaningful because it means they've tagged into a body that's much larger. But even this one hole, it's just the first of a number of holes. They will have to step back and vector in on this by drilling some wedge holes to understand the geology at this depth and to see if they do have a case that there is a substantial expansion. The stock hasn't gone up because they did 35 million units at a dime with a half warrant at 15 cents, and that was scattered amongst a whole bunch of Canadian brokerage firms. And there's been clearly this clip and flip strategy underway where these people sell their long position and clip the warrant, which is a free ride for 18 months on the upside for the project. And this has continued to plague the stock. In fact, the day before the news came out, one firm pounded out 800,000 shares all the way down to 8.5, 9 cents. I guess they felt, even losing a couple pennies on their 10 cents was better than having exposure. It's a sign of how negative the market is with regard to the overall resource sector. Zinc is still hanging in there at $1.40 to $1.50 per pound, even though the warehouse stocks in Shanghai and London have started to rise again. In my view, in zinc, mining with its West Desert project, it is one of the best bets out there. I am a shareholder. My subscribers are shareholders, and it is a spec value hunter recommendation. If you take the PEA numbers that were done in 2014, this project is well in the money. So unless you're a bear on zinc and think it's going to sink, back to $1 or lower, this project, this company is worth buying for the free upside represented by this exploration drilling. Now, the company has also done some additional geophysical surveys, a CSAMT survey. They haven't told us anything about it. Magnetic surveys over the property, the system itself, have proven not very helpful because the magnetite in the system is so strong. IP surveys, which are supposed to detect sulfides, have also not been overly helpful because the oxidized material goes down to 250 meters, and then you start reaching the limits of IP surveys. So the CSAMT survey was intended as a sort of broader, not as detailed survey to tell them what's all going on. And it was done over more than just the deposit footprint. So I have a suspicion that something's going on here that's scaling this story much bigger. The granddaddy of deposits is Bingham Canyon, which is about 140 kilometers to the northeast of the West Desert Project, just south of Salt Lake City, a big giant open pit mine. It sits in the range. This is the same topography as Nevada, basin and range. The West Desert sits at the edge of a range, and there's substantial potential off to the west in the basin. A government mag survey done in the 50s was the basis for drilling by Utah mines. It poked holes at various mag anomalies, hoping to find something similar to West Desert, which was originally seen as an iron target, and then turned into a zinc discovery. But these other anomalies turned out to be younger volcanic andesite intrusions that didn't really have anything to do with it. But the CSAMT survey, if it was done far enough, may reveal additional potential. And there's some rumblings floating around that maybe another Bingham Canyon has been found somewhere in northern Utah. And if that actually were true, that would be extremely exciting, because obviously everything that's sticking out of the ground in Utah has been crawled over. Any Bingham Canyon type system would have to be under cover rocks, perhaps under the basin. In my view, something that's potentially a Bingham Canyon sits deep underneath the West Desert Skarn, which is quite an impressive collection of metal of the sort that you usually find on the peripheries of a major porphyry system. So we'll have to wait and see if they get lucky to the east. But even if they don't, we will have to wait and see what the CSAMT survey has revealed about the broader area surrounding the West Desert project. And failing that, the company will redivert its resources to drilling off the western part, add tonnage, and set the stage for shifting from expansion exploration to feasibility demonstration that West Desert deserves to be put into production. And one of the bonuses that came out of this news release is that there are some very high-grade indium values in this. And indium is one of the minor metals which nobody mines directly. It isn't even recovered as a byproduct at the mill processing stage. It's recovered at the smelter level. And it is a key input for digital displays, also for the solar industry. Much of it comes from elsewhere in the world. Having a zinc copper deposit in Utah, where it's going to be easier to develop it than, say, in some other state, this would be a bonus for the United States, and it could provide a domestic source of indium. This is going to become an ever more important theme as if the United States is retreating from the global stage, it's going to have to make sure that as many of its raw materials that it relies on are domestically sourced.
John, thanks you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. We've been chatting with John Kaiser. His website, kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.